Okay, testing 1 2 3, testing 1 2 3. I'm going to start in a couple of minutes. Just wondering in case anybody's around. It would be wonderful if you could let me know how sound is. Hey, Philippe, thank you so much. Very kind of you. Okay. As usual, guys, there's no real schedule planned, so I'm more than happy to stay on as long as people have questions. So don't hesitate to ask anything. If I can answer it, I'll be more than happy to do so. It could be trading, whatever, related to anything, charts, setups, trade management. I don't mind. If we can go through it, I'll be more than happy to do so. So I'm going to record the first part of this, just a little bit of an overview to post on Substack, and then we'll go through any Q&A, right? So basically, hello guys, no trade calls, no recommendations or responsible own stuff here for educational purpose only, just a little chat, informal chat between traders. As usual, try to do these once a month, and let's see what's happening. So I'm going to go through the main major markets and give you a little bit of an overview of where I think we are and where we may be going, or how I would be looking at this going forward. And then after I've done those major markets, we'll go through anything, any question anybody has. Okay, so I'll tackle all questions as soon as we're done here. So last day of the month. Usually, most people will look for the last day of the month pump and ramp into month end, quarter end. Usually the last day of June is not one of the crazy ones. In the past, it has been bearish, but we'll have to see what's going on, right? Then we're going into July, the strongest month, the most bullish month of Q3. A lot of people will be posting stuff like, NASDAQ, 90% green. And again, keep in mind, it's a bullish month, and especially the 1st of July tends to be very bullish. You get a lot of fund flows coming in July. So that's your base case expectation. Now here, always, these stats are interesting, but you always have to take them with a little bit of a grain of salt because they're averages, long-term averages. And here we're going in a situation where there's an awful lot of event risk, right? Probably Iran, Israel is not done. Probably, Russia, Ukraine, Trump, tariff negotiations, yada, yada, yada. We have to see how things play into this July 9th deadline. Bessent said he thinks we're going to have to push it forward. Trump says we'll probably do something. My base case is they'll try and do some kind of a plan or framework like they did with the UK. Any case, there's a lot of event risk. So also, we could easily end up July green, massive green, but you get a couple of tape bombs and we might get, 10% drawdown. So you always want to be a little bit careful. Now, sorry, there's a strong echo in the sound. It does not work. Are you sure that's the echo? Are you sure you don't have two things open? That's very strange that there's a... And anybody else? Could anybody tell me if there's an echo or something? Don't be shy. Hey, Stefan, how's it going? Is the sound okay for you, or do you have an echo too? Sound is okay? No echo at all? Okay. Well, so far we got one guy with echo, one guy without echo, and everybody else watching doesn't want to, it's too shy to comment. See if anybody else wants to comment. If not, I'll just keep going and then we'll have to see what gives. Philippe, if you're looking at those at the premium stuff, it's all on the blog. Let me post the link for you. Okay. Okay. Okay, well, let's try this again. So, again, we're going into July. Hold on. Okay. Okay, well, let's try this again. So basically here, we're going into July, right? Keep in mind that July tends to be a very, very bullish month. And, most people will be talking about the fact that NASDAQ is always 90% green in July. A lot of funds flows coming into July. So, of course, the market is all bulled up here and we're going into bullish seasonals, but we've got an awful lot of tape risk, right? Whether that's tariff risk, whether that's Iran, Israel, whether that's Russia, Ukraine, whether that's China. So, of course, you could easily get, a huge drawdown and still close the month green. So I think it makes sense to look at each chart individually, right? And just focus on one things at a time. Also summer trade can be a little bit funky, so you want to be a little bit patient, right, and conservative. So where are we looking at these major markets? We'll take questions afterwards. Let's look at some major markets. So SPX here, right, all built up. Nice little move. For those of you guys who've been following these webinars, we discussed the fact that you'd really had to consider that this was a significant long-term low, the way this traded, the way we saw intra-market correlations, the way the VIX behaved, yada, yada, yada. And this is going, right? So clearly all-time highs are bullish and it's very hard to be bearish here. Does that mean we can't get a retracement? Absolutely not. Does that mean that we haven't left a lot of poor structure behind and you've got a lot of potential gaps that can fill? Sure. But, your base case assumption here can't be bearish unless you get a catalyst or you get a strong failure here, right? Now, the way I would be looking at this going into July and going forward is focus on these previous all-time highs, right? Any move back into that level that holds and that can't get traction below is going to be a buying opportunity, right, for people to continue to play the upside. So basically, you would look at this zone, any pullback into this zone, and if you want an easy or a lazy way to look at it, you can just look at the 10-day moving average, right? As long as pullbacks fail to close below the 10-day moving average, you see buyers coming into the 6,100, your base case assumption has to be that, these dips are going to continue to get bought and we're going to continue to extend higher, right? Now, clearly there's a lot of targets to the upside, but because we are at all-time highs, whether you put fib targets or any kind of targets to the upside, it's any new high possible as long as we're pressing there, especially if you get FOMO coming in. Institutions had been, underweight. If they have to come back in, you could easily get some panic buying. So there's really very little edge trying to be short as we're breaking all-time highs. New all-time highs are bullish, new all-time lows are bearish, right? Now, what happens if we see a retracement, we get a tape bomb or something that gets us to trade below the 6100, below the 10-day moving average? Well, what that does is that's going to open up a lot of poor structure to the downside. It's going to open up a lot of targets, right? Now, the natural level to look at is for this 2025 open and this whole cluster of moving averages here to come in and support, right? So the way I would look at it is really, let's make it super easy, 6100-ish, or, you can use it, into this cluster of moving average and the 2025 open. That's a huge kind of neutral zone, right? Where we could easily trade inside this range, and it doesn't really mean anything. Anything that holds back above, that pulls back here and gets bought, so a move back into this level gets defended, is bullish for continued rotation higher. And any day close back below, that 2025 open, back below this whole cluster of moving averages, you can use, if you want an easy way, lazy way, you look at that 10-day here and the 200 here, right? Closes below, above the 10-day, closes above, below the 200. And so closes below this zone, well, then that turns it bearish, and you look at a lot of downside targets, and those start with the 5,700-ish, this open gap, then you've got another big gap here at the 5,300, etc., etc. So that's the way I would look at it. I wouldn't make it any more complicated. Don't have a bias. Don't focus on that. Just let the levels guide. And I think that's a very, very good way of keeping an eye on and looking at and interpreting the action on the stock market in general. Okay. Now, DXY, what's happening in the DXY? So here basically Trump is winning, right? What were the three things he said? Stocks higher, yields lower, and crude lower, right? And dollar getting smashed, and everything's playing out for him right now. So if you're looking at this dynamic here, this is a very controlled and orderly breakdown of the dollar. We've been talking about this whole broader range where we've been stuck, what you can call it, that whole 109 into 100 range. And what's happened here is we had this break below, very shallow retracement, and we're moving down in extensions, right? So if you're looking at this also in terms of this fib move here, a natural target would be for this to come back down into the 95, 94. These two lines, some people had asked me, what are these two lines? Well, basically, if you look at the move from lows to high, basically this was the 78, right? That's all. So right now, everything is pointing to a hold below this breakdown zone that the market, that dollar is going to look at, trying to come back into the 95 level. So if you kind of flip this over, right, and look at it kind of like the ES, we talked about that move into the 6100, and any buying there, expect higher. Well, you can almost look at that whole 6100 range as this breakdown, right? So any move back into this area, into the 10-day moving average, then you would expect the market to be moving down in extensions and trying to come back down into that 95 level. Any pop back above the 10-day, the 100, all the way into this 200, again, we talked about the 10-day and the 200-day, is a huge kind of neutralish zone. And the only way this could really turn bullish, right, would be if we get daily closes above this 200, above the 103, and we start to move higher, right? So again, you're looking at, this is the bull zone, this is the bearish zone, bearish zone. And right here, this is a huge neutral zone, very similar to to the ES. It's all one big trade at the moment. Everything is moving in sync. What does that mean for gold? Well, here, ultimately, even though there's a lot of reasons fundamentally for gold to continue to be bullish, there's you got a little bit of a heavy action here, right? So this is the daily. You can see how we've been breaking down. We closed below the 10-day. We closed below the 50-day. And this looks like it's trying to come back into the bottom end of this area. If you look at it from a weekly perspective, also, you got a negative close on the weekly, which is fairly heavy, right? Usually, unless this can regain that 10-week very, very quickly, this opens up a potential move all the way back into the 3,000 level, right? That's what you want to watch. So here, if this is going to continue to, whether it's central banks, whoever it is, doesn't matter. But if this is going to continue this aggressive move higher, you want it to pop back above that 10-day very quickly. If it can't get traction back above, then everything is pointing to a bigger correction into the 3,000. Now, a lot of people will be talking about this being a bull flag. A lot of people will be talking about this being a big breakdown, but you could easily argue that this is just still stuck inside this huge range. Now, one thing which we'd been going up and we'd been using is this weekly reversal, okay? So on my charts, on the trading charts, what I have basically is that zone highlighted. What does that mean? So I'm taking the high of this weekly candle and the low of this weekly candle. Why? Because the way we're looking at this is a huge impulsive move higher, and then you had this big failure on the weekly, right? That candle. So I want to shade that area, and I want to use that area, right? I always prefer to use static horizontal references rather than, moving averages or trend lines. And to me, that is a static reference. And what that means is I consider anything inside this weekly candle range to be neutral, above bullish, and below bearish from a weekly perspective. So despite the fact that we closed back below that 10x, to me, I'm not completely sold that we're going to 3,000 quite yet. What I want to see is closes below the bottom end of this range. Okay, so just to draw it again, this high and low of that weekly range is what is really important to me. Bullish above, neutral inside, bearish for 3,000, even though this is still in a longer term bull move. Okay, so that's gold. Then let's do crude. Crude, this is a tricky one. Here, crude, we're going into, nobody left trading crude. Everybody's being margin called and killed, right? You see how we basically spent the 4 or 5 days in a tiny range. Bigger picture here, we're going into, July tends to be a heavy month for crude all the way into the end of the year. We're getting like bearish seasonals in crude. I think this is a little bit shell-shocked here, right? Everybody's got caught both sides. It's a tricky one. I wouldn't be surprised if this just is kind of stuck here. I don't see why you'd necessarily want to get aggressively short when you still have risk of things not being resolved. But equally, do you want to get long after you got such a big smash down? I think here this is one of the key pillars of Washington. So I would expect that unless something crazy happens, broadly speaking, this huge range holds. And this huge range is very comfortable for everybody. And I really don't see anything to do aggressively. What we've been discussing about this really was that hold above 70-60 could be substantial. But you see, even on the war headlines, we came right back inside. So it just feels that it's very comfortable inside this 70-60 kind of area. Okay. Bonds, let's look at TLT. TLT kind of holding here. I think you can make a good case for low trying to be put in. You can make a good case for this being trading like death and needs to trade lower. My base case here is that these have been very, very hard to trade, and I'm sticking with the same chart we're focusing on, right? To me, there are two huge turn points here, right? Most recently that we've been dealing with. And those big turn points are 99, you can call it 185, right? And to me, this is still much to do about nothing as long as we're inside this range. And of course, you can trade this range, but I think you don't really know anything as long as we're stuck inside this range. You can also see that the 20-week is coming back into there. So I continue to look at it in terms of, again, in terms of bigger picture, as this whole area being a huge neutral zone. But clearly the pressure is still on, right? The pressure is still on. Look at how aggressive this is. You know, this is really struggling. So you could look, instead of a midpoint between this 99 and 85, I'd use the 91.80, which has been a big turn point. This was that low from 2022. So that's what I'm looking at. You know, let's put it in. Let's draw it in like this. Basically, I'm looking at this, a shorter term turn point here, bullish above for 99.50s or 100, whatever you want to call it, and bearish below for back into 85s. Clearly, if we close above 99, then I expect 108 to come very, very quickly. If we start getting closes here once again, then I would expect we have to come out and flush these lows and potentially come into the 80. Okay. And last but not least, in terms of the main markets, and then I'll take questions and I'll stop the recording for Substack. Here, Bitcoin, right? And again, I think there's very little to say on Bitcoin. I know there's people calling for this to unwind back into 50. A lot of people looking for this to be at 250 in the blink of the eye. But bottom line, it's just trading with risk, right? You can look at this plotted against NASDAQ. It's just trading with risk. So don't make it harder than it should be. It's trading with risk. If you're thinking about it, ultimately, I don't think you should be, if you're mega bullish, super happy with the way it's been trading, really, because you'd want it to decouple from risk. And also, with all the positive news that are being thrown at it, it's surprising that it can't get traction, right? That it can't get traction through those highs and into those 200s, right? So right now, I think you just have to, unless there's something specific, which is a catalyst to get structurally long or structurally short, if you're flat here, it's just trading with risk, right? And right now, you've got a situation where that yearly open seems to be a floor for now, but clearly it can't get traction back above this weekly. You know, almost like that gold, what you could do is, you see we had this whole ramp and then you had this failure on the weekly, right? I kind of like doing this generally. So what would you do is you just highlight that weekly high and that weekly low and say, okay, this was where we really got this exhaustive move after this huge rip, and we have to trade comfortably above or below. So above that high, you'd be bullish for continuation higher. Inside, this is a huge neutral, and below, you'll be looking for bearish for a move back into these lows. But what's messy is that it just seems to be pinned at highs, and even though here we had some closes above and some wicks above, it can't attract any new buyers. So it's just stuck here and it's trading with risk. You know, that's pretty much the way I'm looking at these major markets. Okay, let me stop the recording for Substack, and now I'll go through the questions you guys asked, and we'll try and tackle those. Okay. I'm going back. So SoftBank. What do I make of SoftBank? Masa-san, what's the ticker? Where is it? Is it the one on London? Is this the one you're looking at? Let me read the question again. Well, the question is, do you want to bet against Masa-san, right? I mean, here, I personally don't want to have anything to do with SoftBank in general. It looks stuck. If this is the chart you're looking at in this huge range, you seem to have very, very aggressive stick safe bids coming in here. And this is just kind of stuck here. I don't think there's anything very, very specific I'd want to do here. Could you get a stupid headline and fill all these gaps to the upside? Yes, but this is not something I would really want to trade actively. I don't know if you've got another ticker. If this is not the one you're looking at, let me know. I'll go through it. Bram asked for euro, I think. Okay, so it's on the Nikkei. Oh, what is it? Let's see. Okay, gotcha. Okay, yeah, so I mean, the problem is always the same, is that any day Masa can just come out with one of his PowerPoint slides with unicorns and something crazy. You see what I mean? So philosophically, religiously, I want to be short Masa, but I'm never going to put that trade on because he can pump it to stupid levels, if you see what I mean. Now, if you get a failure here, could this be an interesting short? Sure, because it's not really a triple top. You have all these pumps with an awful lot of poor structure to the downside. If you can get a nice little risk reward and give it a shot on a short here, why not? I definitely wouldn't be buying here, but this could be, this gone. But the problem is all he needs to do, Stefan, is get on a press conference with Trump and this keeps on going stupid. Do you see what I mean? He just doesn't like the price action. He posts a PowerPoint slide with some unicorns. He does a press conference with Trump and this thing's going to be up double. You just don't know. But structurally, if you look at the way this is trading, would a negative reversal here be interesting to try and play for some gap fills? Sure. But this is, to me, it's kind of like, this is worse than trying to short Tesla, than trying to short a Ponzi. You never want to short Ponzi's, if you see what I mean, right? So Bram wanted for Euro USD. So what's happening on Euro USD? So here we have to flip back into a bigger weekly picture. And here, we've discussed this. It looked like Euro's trying to make a break to go all the way back up into that 125. We had this big break here, right? That once we've taken out this level, there's really not that much. When you tend to see these kind of trend lines break, we tend to go back into the scene of the crime. This has become some kind of triple toppy action. If we break above, then it could really be an explosive move. Now, would it make sense for this to stall a little bit? Sure. Could it pull back into the 10-day? Sure. But this chart is extremely bullish. And the way I would look at it is, this is that big breakout zone, right? And unless this starts to trade back below the 112, any dip is likely going to be bought for this to continue to try and trade back into the 125s. Below that area, you've got this cluster of moving averages. You've got the 1010, which will likely attract. But right here, this is a very, very bullish break. July tends to be a decent month for currencies against the dollar. And the picture is a little bit different if you're looking at euro, the strength you've seen in euro and some of the commodity currencies. But here, at best, you'd be looking for some kind of a pullback, but you've got a lot of previous resistances that now will be support. The short's going to be a tricky one unless it's on a headline. But then again, I'd rather play it on something else. Okay. Hey, thanks, Mike, for that sound. Does the April sell-off and reversal mean continuation higher, or will digest? Stefan, sorry, what was that on? What was that question on? What chart were you relating to? And here you're seeing a little bit of, when you see these rips, right, on thin action, on thin volumes, because we've seen volumes very, very thin. You've seen a lot of RTH sessions, ES trading like 700, 750. very, very low, right? But you see what happens is, look at Palantir. See this kind of going cocaine angel, right? You see basically how we've ripped up here. And look at this, right? We've gone here 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 days here to go from A to B. And then essentially we unwind it in a couple of days. If you look at it from here, this is like, since May, all the way up, and then pretty much we unwind in one day. So that's the problem. That's what you have to be careful with, right? And you're not seeing everything completely move in sync. You're seeing something like Microsoft also, stalling here at these highs. This is just panic buying into these highs. Now, is this going to come up and at some point test the 10-day? Sure. The problem is you don't know if this is going to do it from here or if it's going to gap up another 3-4 times. But basically, if you're running longs here on stuff that's trading like this, you have to be careful and you have to tighten up your longs. Usually, if you're long in this kind of environment, it's fairly easy to manage your long because you can just trail the previous day low. Because you see, once we start going complete stupid to the upside, the previous day low never gets tagged. So you want to trail and you want to be careful, right? Because sooner or later, the risk is that you get something like Palantir, and there's no point giving all that back. There's nothing wrong with riding long into these squeezes, but you have to manage your risk, right? That's key. And, the picture is very different because even look at it, NVIDIA, we've ripped all the way back into those highs. But if you look at something like Apple, it's still not moving, right? It's still moving. Like, dude, you've got Amazon ripping into those highs, but, not everything's in sync. So here, NVIDIA here, remember, all-time highs are bullish. So the risk is, unless you fail to attract new buyers, as long as you find new buyers, this is just cocaine angel to the upside. So you should treat this exactly the way you would treat that SPX, right? Here, any break that holds above those highs is bullish. Any micro dip that gets bought, this is bullish for any new high possible. Now, if intraday you start to see some selling coming in below the 153, then it becomes extremely interesting to try and play for this gap fill and for a move back into the 10-day. But this action is still extremely bullish, right? Whether you like it or not, or the reasons for it, doesn't matter. The action extreme is still extremely bullish. So, there's really no edge. But you see, it's the same structure across the board. Have you guys noticed that you've got stuff moving, whether you're looking at the dollar, which is puking down, or stocks that are catching a bid? Stuff is extending. It's fairly extended relative to the 10-day moving average. And it's very extended if you look at also historically against the cluster of moving averages, which is the closest one, let's say after that 10 days, that 50-day. Now, usually when stuff tends to be, 5, 6, 7% away from the 50-day on big gap up after gap up or big gap down after gap down, you tend to be to get closer and closer and closer to correction that comes right back and fills. However, remember, it doesn't mean that it's a change in trend. Okay, whether you're looking at that dollar, should it pop back up into that 50 and the 200, or whether you see these stocks or risk assets puke back down into the 50, into the 200, that's not a change in trend. Right now, what you need to see a change in trend, you need to see day closes below that cluster of moving averages. So it doesn't mean that it's not interesting to play for some kind of mean reversion, but you have to understand the context and that it doesn't necessarily mean a huge trend reversal. Yeah, time will tell on AI. I think the issue on AI is also that it's very different stock to stock. But are we in a little bit of a bubble? Sure. Is it? But I'd look at it kind of like, you got a situation where are we a little bit extended? Yes. Are we a little bit in a bubble? Sure. Are we probably going to get a nasty correction where a lot of companies blow up or yada, yada, yada? And think, sure. Is it going to be higher? Are the ones that survive going to be much higher 10, 15 years from now? Sure. You see what I mean, Stefan? So the problem is it's kind of like trying to short those moves is sooner or later there'll be a decent correction, but you don't know from where that is going to come. You see what I mean? So you can't just blatantly fade the move. Now, let me offer you a different perspective, right? Don't forget, a lot of people haven't realized, you see we popped up here on NVIDIA. NVIDIA this year, right, off those highs, corrected 40%. Does that make sense? So there's still people saying, oh, this is in a bubble, it needs to correct. But what if the correction already happened? That's why we talked about, earlier this year when we made those lows in April, you have to consider that could be a significant swing low. Right? You can go back on, even look at Apple, right? Off these highs, 34%. So, you could argue that a lot of that correction already came and these lows are solid. Now, I suspect that unless you get crazy tariff headlines, a lot of these lows are going to try and stick. But as always, I wouldn't necessarily. I would always look at each chart individually and trade each chart individually and each pattern individually. So, long price, long technical levels, short bias, if you see what I mean. Any comments, any questions, anything else anybody wants to look at, anything we haven't looked at? This is going to be an interesting one to look at, URA. Again, keep in mind, we're fairly stretched here for longtime followers. No, here we've been, I know uranium is very fashionable now, but we were long since 10, we've been looking at this for like 4 years plus. And our first target from these 10s, we considered neutral to be 20. Our primary target was 40 and our extension target is 70. So here we've made it back into our primary target. And could this correct a little bit? I think you have to be a little bit careful buying these highs. I'd also look at this once again as a broader sideways area here. And you see basically you can use this daily candle as a guide. Above, squeeze, below, time for a little bit of a correction. You've got a lot of gaps to possibly try and fill to the downside. I think we've covered a lot of stuff. Any comments, any questions, anything else anybody wants to look at? Okay. It looks like it's a wrap for this time, guys. Okay, I'll post the recording. The recording will be up on YouTube. I'll post the first part on Substack without the questions. And again, we'll try and do it next month. We'll do another one, okay? Thank you for stopping by, everybody. As always, thanks for retweeting. Thanks for liking. Thanks for sharing. And we'll catch you guys soon. Have an awesome July. Manage your risk. And catch you back soon. Take care, guys. Bye-bye.